This is Wall Street Week. I'm David Weston, bringing you stories of capitalism. The AI race isn't just among companies and countries to get there first. It's also a contest between scientific discovery and making a whole lot of money. And Demis Hassabis is trying to win at both. Plus, if we don't watch out, China will end up beating the U.S. in AI by winning the race to bring new power online, including through a dramatic increase in renewables. And even as some governments are trying to attract new business and wealth through favorable taxes, others are going the other way, which has led to a nasty public spat between Ken Griffin and New York's Mayor Mamdani. But we begin with the war in Iran, which seems far from over despite President Trump's wishes. But so far, the war hasn't really bothered the debt and equity markets all that much. Bridgewater founder Ray Dalio has spent a career making long-term investments based on his understanding of the geopolitics and the politics of great economic powers like the U.S. being challenged by others.
Follow the cash, follow the money, okay? There's a reaction like wars are bad, and wars are bad. But the reality is markets trade as the present value of future cash flows by and large. And so if you've got the cash, follow the cash. So what's happening in the way of changes, what it means for energy in Asia, or what it means here and for our cash flows, but the markets are trading on the basis of the cash flow. So when we came into this period of time, there was a reaction before we had the earnings reports. There was a reaction that this is a scary thing. Quite often markets will sell off at that time. They did sell off. And then we had great earnings estimates. And the reported earnings were much greater than the actual earnings. So follow the money, okay? At the end of the day, you're exchanging a lump sum payment for a future cash flow, and that's what matters.
What about those longer term trends? I mean, tectonic plates as they were shifting, whether it's monetary, whether it's financial, whether it's geopolitical. How does the war in Iran fit into those sort of long-term shifts?
Yeah, it's interesting. If you look at the markets, Pearl Harbor comes, imagine that. And you see not much effects, initial effect, and then you see the cash flows mattering. But over the period of time, it depends. There are the winners, there are the losers, and there are the neutral countries, okay? Economically, the winners still experience the cost of the war, the debt, like the British Empire had the debt and had its consequences. The losers of the war get wiped out. You change all orders. You change the domestic political order, the international order, the monetary order, and almost everything. The winners are the neutral countries because they profit during the war. The United States made a lot of money in both World War I and World War II in the time when that wasn't in the wars. And then it accumulated a lot of gold and so on, and then it entered the period late. So the neutral countries are the ones that end up not being disrupted and end up doing the best.
I'm not even sure what it means for the U.S. to win the war in Iran right now.
But I think it's clear.
Tell me.
Okay. The world is looking at, will Iran have this control the Strait of Hormuz? Will it retain the uranium, the nuclear, and will it also have the power through the missiles and others to inflict harm? Will the United States have the power to fight the war? In other words, with politics and Americans with gas prices and cost of living, we now have a situation where the world is looking at this and defining it. Does the United States have the capacity to win the war? And this has huge implications because it means, for countries, it means alliances. Why do they have the bases there? The United States has about 750 bases in about 80 countries. And those bases are largely there under the assumption that the United States will turn up and defend them. Right now, that perception is changing. So I think winning the war is clear. Iran is perceived as a middle power, not a great power. And can the United States win it or not? And this is now having a big effect in when I go around the world, like in Asia. You know, the United States, it has been viewed as a countervailing force relative to China. Okay, now it's believed that the United States cannot be relied on to fight that war, will not be there with those bases. And this is changing relationships with China too. You're seeing a number of leaders go up to China and essentially have relations, but it's like the tribute system. But also in the region, there's the recognition, in their view, that there is an environment where the countries in the region have to recognize and respect that power. And so now you're seeing that happen. That tribute system is not a oppressive, controlling system. It's much more like there's the more powerful have an obligation to behave well with the less powerful, and the less powerful have an obligation to recognize the more powerful, and they should operate in a harmonious way.
You say that as far as we can tell, you can tell, the Chinese by and large think they're doing pretty well in the rivalry with the United States right now.
China Inc. is making a ton of money. In other words, if you look at the amount of money that they are making through their export earnings, and the amount of financial assets that they've accumulated and are accumulating, it's huge. So one talks a lot about trade, but you have to look at money and the quantity of money and their earnings and their raising of living standards and how they're competing in various areas, certainly AI, but robotics and a number of areas. You would have to say that they are doing very well.
We say the post-World War II order, imposed largely by the U.S., is breaking down. Would you say China has a substantial say, if not dictating, the next world order?
Yes, of course. But that doesn't mean, I think you said it well, and not dictating. I think that there will be an evolution. And I think that China's rise in relative power that we're talking about is creating a situation that they will create a tribute system type of system. And what's important and actually practical about that is it recognizes that there are differences in power, okay? The system that we went through, a tiny country in the United Nations could have the same vote as a huge country, and it wasn't a practical system. So I think you're going to see it evolve in that region as being a tribute system type of system. I think increasingly we're going to see that in the world. I don't expect China to be an aggressive military power. I think that you will see economically Chinese companies competing in the world. You're going to see an acceleration of that. The use of the renminbi as a world currency, you're going to see an acceleration of that. It won't replace the dollar quickly, but it's going to grow quickly for transactions. So you're going to see that kind of operation. You're going to see in negotiations, you're going to see that you will not be able to push around China. That it will be a force.
What does this mean for investors, such as you? I mean, investments are made against an order of some sort. There's a predictability. You have contracts, you can enforce them. If in fact there's a breakdown of the world order, what does that say to investors?
I think first of all, when we think of investing, we have to think of what is investing for, and it's our total life, not just making the most money. So they have to think about diversification very well, right? In other words, they have to think about, we're now in a turbulent time. And that means, for example, the value of money could be a risk. What currency is it going to be in? So, and how do you diversify? So for example, now as we have AI having a big effect, it's a fantastic technology that's like going to have big revolutionary effects. If we look in history of such cases, what we can see is then it also can create bubbles. Also, liquidity is very valuable in a very rapidly changing world because uncertainty is so great. Look at the difference in SaaS stocks, by way of example, right? So who would guess? Who could know? And so liquidity is very valuable. That's right. Diversification is very valuable. And when I say diversification, I do include gold in that, in terms of money, because we do have a question mark in terms of money. And these are not tactical moves. In other words, I don't think that the average man should be moving in and out based on what I say or what others say. They should have a strategic asset allocation mix that they by and large stick to that has the best reward to risk ratio.
Coming up, what happens when the world of scientific discovery runs up against the need for hundreds of billions of dollars? The story of Demis Hassabis of DeepMind next. This is a story about passion and profits. The quest for scientific discovery often begins with curiosity, but money and power can follow closely behind. We saw it with the printing press, the nuclear bomb, and now we're seeing it with artificial intelligence. When a technology becomes powerful enough to change the course of humanity, who should benefit most from it? And who has the power to control it?
Maybe Demis Hassabis turns out to be the Robert Oppenheimer of the 21st century. Somebody who leads a project like the Manhattan Project, brings into the world an incredible technology. It's a massive scientific achievement and it's dangerous. And I think the builders of the technology, including Demis, as I got to know him, had that same thought.
Sebastian Mallaby is a senior fellow at the Council on Foreign Relations and the author most recently of The Infinity Machine. His book chronicles the rise of artificial intelligence through the lens of one of its key players, Demis Hassabis, a Nobel laureate and the co-founder of Google's AI lab, DeepMind.
Right from the start, they were thinking, the Manhattan Project was both good and bad and probably going to be the same with AI, and we have to be careful. And so right at the beginning of DeepMind's story, Demis Hassabis meets his scientific co-founder, Shane Legg, at an AI safety lecture in London. And this is 17 years ago. Again, the nuclear analogy is instructive. We have a nuclear non-proliferation treaty for nuclear weapons. It's not completely airtight, but it's better than nothing. And that's what we're going to need to have with artificial intelligence.
To get there, some believe that we might need a wake-up call. That's what Nobel laureate Geoffrey Hinton told us late last year here on Wall Street Week.
Some people say that our best hope is to have AI try to take over and fail. We need something to really scare the shit out of us. Something like Chernobyl for AI. I'm not sure I agree with that, but that's certainly a possibility. We need something to make people pay more attention and put more resources. So at present, the big companies aren't going to put like a third of their resources into figuring out how to make it safe. But if it tried to take over and only just failed, maybe they would.
Even without an AI uprising, Mallaby thinks policymakers have become more aware of the technology's risks, especially in the wake of Anthropic's Mythos rollout.
Mythos is a dangerous point because already, the US Treasury Secretary, the Fed chairman have told the banks, listen, your bank accounts are going to be emptied if you don't protect yourself against these systems. So we've had hints of Cuban Missile Crisis already. I would point out to Geoff Hinton, who I like very much, that before the Nuclear Non-Proliferation Treaty in the 60s, there was the 1950s. And in the 1950s, that's when the IAEA, to track all the nuclear material, was created. In 1956, it was negotiated. So, that was actually ahead of the Cuban Missile Crisis.
Whatever the outcome is for AI, Mallaby thinks it will be shaped by the people who create and control it, and their individual personalities and motivations.
And in Demis Hassabis' case, he's building something which he himself says is dangerous, right? Why do you do that? What makes you want to do it? And the answer in his case is scientific curiosity. He is so burningly determined to understand what he calls the fabric of reality, that he expresses that ambition in spiritual language, that to understand nature is to become closer to God.
For others, Melleby says, it's the ambition for money or power.
I think if you look at the other end of the spectrum, you look at Mark Zuckerberg, for him it's always been really commercial, right? He wants AI because it will make Instagram and Facebook be more compelling, maybe more addictive. That's what he's motivated by. I think Elon Musk just wants to be the greatest industrialist of all time, so he wants to do it for that reason. Sam Altman is kind of opportunistically riding against something that will make him powerful. This is a man who thought of running for governor of California, is rumored to have thought of a presidential run, so he wants power.
But whether it's power or money or scientific achievement that motivates the world's AI titans, they all have at least one thing in common: the drive to be number one.
I remember going to see Demis right after the launch of ChatGPT at the end of 2022. And of course, this was the moment when DeepMind and Demis Hassabis had been the leaders in global AI without dispute for a decade. And all of a sudden, this upstart in California, Sam Altman, drops this model, it goes viral, and Demis is no longer the leader. So I go see him and I say, well, how do you feel about this? And he says, Sebastian, they've parked their tanks on the lawn. This is war. You could see that competitive fury in his eyes. And yes, I think most complicated human beings have more than one personality inside them. And in Demis's case, there is the scientist, there is also the furious competitor.
There's also the enormous need for money, for capital to compete, for compute, but also for the talent that comes across in your book about how much it costs to really get some of these scientists to come work with you. Does that necessarily take it out of the science and make it fundamentally a commercial phenomenon?
Well, it's definitely a commercial phenomenon, and we just saw in the results this week from all the big tech firms that they've expanded what they say they're going to spend on the computing chips, the infrastructure that they need. This is just going from extremely big to crazy big. So you're totally right, it's commercial, and we can't escape that. But it could also be scientific, right? That you could have both at the same time. And for what it's worth, Demis's view is that the future path to, the kind of AI that can unlock all of science is through these large language models. There's no alternative path where you go in some totally parallel route. So we're going to build these large language models. They're going to get better and better. They're going to become more agentic, where they actually take actions. They're going to understand the physical world, that's spatial intelligence. And then from there, it will get into the ultimate test, which is, supposing you trained an AI and you told it everything that people knew in 1911, could it then invent by itself general relativity?
The tension between the science and the business of AI has come to a head in the ongoing trial between Elon Musk and OpenAI. At the center of the trial is a debate over who should control the ChatGPT creator, and the outcome could shake up the corporate models that have underpinned the tech industry's explosive AI growth. As of right now, as we speak, it's something like $725 billion this year from the big investors. How does that pencil out?
I mean, fundamentally, what we've got at the moment is an A+ technology with a C- business model. And the purpose of capital markets is to bridge from today, when the technology is great but you're not making money, to some beautiful future when finally you figure out the business model and you do make money. But I think we're running an experiment in the limits of that capital market function, because the capital markets are not infinitely deep. So when you have OpenAI, which was spending money like completely crazy, and was not attached to one hyperscaler, deep-pocketed balance sheet. That was extremely precarious, is extremely precarious. I said 3 months ago that I thought there was a 50-50 chance that OpenAI would go bust. Basically, I mean, it would be absorbed by another company. And I still believe that by the summer of next year, there's a half chance that it just runs out of its ability to raise money, it has to sell itself.
And that's where the hyperscalers are now all created equal. Because in a Google, they can say we're making up more money on search, and maybe Genius as well. We've got some revenue coming in for this. And Amazon can say we certainly have the cloud that's helping us a lot. Then you get to a Meta. It's not quite so clear what they have to support this investment.
Right. And they just seem to be quite clumsy about translating all the money they spend on AI into actual AI results. And we'll see how this plays out. But there was this moment last year in 2025 when they were doing record expenditures on the signing bonuses of AI scientists, because basically they didn't have much of a team. And the only way they could get a team coming from behind was to just 10x people's salary. And so, all the other labs were going nuts. I actually witnessed the head of one of the other companies, pretty much yelling at the Meta person, saying, you're draining all our talent. You guys are, completely useless. You're never going to build a system that's really powerful because you're hopeless. But you're taking our good people away, and then the Chinese will overtake us, and then they'll kill us. It's pretty extreme.
If throwing money at a problem is the clumsy solution, and often not the right one, what business model both contains ambition and allows science to flourish? Malaby says some of the big players have tried through their corporate structures, though none has yet proven effective.
All of the top 3 labs have experimented with these governance ideas. And in fact, in my research for this book, I found out about a thing called Project Mario, which was secret hitherto. But Project Mario was essentially Demis Hassabis saying, I need safety governance, I need a kind of non-profit board which will oversee the powerful AI when I get it. And we can't just have the corporate board of Google deciding how it gets rolled out. That's not democratically legitimate, that's not good for humanity. We need that non-profit structure to be grafted onto Google. So he spent 3 years fighting about that. As we know, in OpenAI, more in the public domain, they began as a non-profit, and then they grafted on a for-profit later. Anthropic has its own version of this kind of hybrid for-profit, non-profit. But the harsh reality is, as you said earlier, this is an extremely expensive technology to build. And so the for-profit, capital-raising, kind of red in tooth and claw capitalist thing is going to dominate because you need money all the time.
Is there anything the government can and should be doing now on the safety front?
So there are 3 things. The first thing is we already have a national AI sort of security monitoring body, but it doesn't have enough resources. It doesn't have the power to veto a model before it's released. We should have one which is like the Food and Drug Administration, which is properly resourced. It has expert staff. And if the drug is not safe or efficacious, you can ban the release, right? AI is just as dangerous as drugs. So we should have an FDA for AI. Second thing we should do is we should divert more money from just building the model stronger to alignment research, where you align the model with human priorities. That's a whole field of engineering. It's getting some resources at the moment, but obviously it's not in the commercial interest of the companies to invest too much in that. So public policy needs to support the public good of AI alignment. And the third thing is on the international front, because like it or not, the Chinese have very good AI models. So unless we bind in China and other countries like France, which has the AI lab Mistral, and other places, we need everybody to acknowledge, just like we did in the nuclear age, that this is dangerous if it proliferates into the hands of terrorists and so forth. And so we should all come together with agreed, joint, common safety standards. Otherwise, if just one country is safe and the other ones aren't, we haven't made humanity any safer.
The invention of the atomic bomb gave humanity a stark warning. It's up to humans to safeguard against technology of immense power endangering us all. And as the AI battle rages all around us, maybe we can take some lessons from that earlier arms race to limit the potential damage from the next one. Up next, the U.S. is in a race with China to develop AI, but who wins may depend less on the models and chips than it does on how we go about finding the power for all that AI needs. This is a story about taking your eye off the ball. Since President Trump came to office the first time, he's been focused on the economic and national security risks posed by one country in particular.
Did you say China? China?
China!
We were losing to China.
We want to beat China.
We're leading China.
In his second term, President Trump has focused on AI as a key area of competition between the two countries, and specifically the chips needed to drive all those large language models.
China and other countries are racing to catch up to America, having to do with AI, and we're not going to let them do it. We have the great chips, we have the great everything, and we're going to be fighting them in a very friendly fashion.
But while the U.S. is doing what it can to protect its lead in the computer race, there's another contest that it may be losing: the battle to make sure we have the power we need to drive all that AI we're developing.
It's fascinating because when you look at AI, there's a huge energy need for the data centers.
We all know Hank Paulson from his time running Goldman Sachs. and then leading us through the great financial crisis as Treasury Secretary. But he's also devoted much of his career to climate issues and helped lead Goldman Sachs to China over 30 years ago.
We have one big advantage on China in the sense that we're energy independent, right? And they aren't. But we have a shortage of electricity in this country. The demand is much greater than the supply, and it's growing. And so we have a shortage of electricity to power data centers. China, on the other hand, they're investing massively in coal and a lot of things I wouldn't like them to be investing in, but they are investing big time in renewables, solar and wind. They have more renewables than Europe, the UK, the US combined. They're going to have half their energy from renewables. So they've got plenty of electricity. Meanwhile, in our country, utilities can't meet the demand. Electricity prices are spiking up. So ratepayers are putting up their hands and say, no more. At the same time, we need the electricity. And so the interesting thing is, if you look at the US, all of our electricity, essentially new electricity, the last couple of years has come from solar and wind. At the same time, the administration is restraining it. So again, I would say that we are ahead of China when it comes to AI. They're investing massively, but I got to tell you, the biggest potential drag we have is not having enough electricity to power our data centers.
Are we disadvantaging ourselves?
I think we are.
Former U.S. Ambassador to China, Nick Burns, saw the unprecedented scale of China's energy investment firsthand.
I used to travel a lot by train in China because you can see a lot more of the country, you can talk to people. The degree to which China is building transmission lines all across the country, and I visited 26 of the provinces, even out to the west, it's staggering. The degree to which they're now controlling the global supply chain in electric vehicles, in lithium batteries, in solar panels, in wind power. They are the world leaders in this, and I think that the United States should be making a similar effort. You know, maybe it's not as cost effective now, but we have to think out to the 2030s and 2040s, and I do think as we consider this big challenge of how do we compete with China and yet not get into a war with China, we have to start planning more long-term as they are doing.
The numbers bear out what Hank Paulson and Nick Burns have seen on the ground in China. Since 2021, in just 5 short years, it has added more power capacity across all energy technologies than the United States has built in its entire history, and that gap is only growing. Over the next 5 years, China plans to add more than 3.4 terawatts of energy generation capacity, nearly 6 times as much as the U.S.
They've been developing their electric grid at a rate that is extraordinary.
Elizabeth Economy, a China policy expert and senior fellow at the Hoover Institution, says there will be a high cost to falling farther behind.
China has made a big bet on renewables and clean energy more broadly. This past year, for the very first time, it has more power generation capacity in clean energy than it does in fossil fuel energy. Now, they're not the only ones. Europeans are following suit, but we clearly are moving in the opposite direction, sort of all in on fossil fuels. I think it's important to understand that the bet from the Chinese side is not necessarily just about the health of the Chinese people or the Chinese environment. This is a real economic play for them. You know, they are cognizant of the fact that by 2035, the clean energy market is estimated to be globally as big as $7 trillion, and they want to command that market. So they have spent a lot of time over the past several years investing very heavily in renewables. You know, last year, $1 trillion in renewable investments. And as a result, they've seen their exports of EVs skyrocket, 80% increase in 2025, 40% for battery exports, 20% for solar panels. This is a real moneymaker. So I think for the Chinese, as they look out, clean energy is green, right? It's green for the environment, and it's green for money.
You make a really interesting point that this has been going on for several years. President Xi did not just wake up yesterday and say, let's have a lot of renewables for AI. It started before really there was the big push for AI. How much of this is pure commerce rather than development of AI and competition in AI?
I mean, on the energy side of it, I think the AI is very late to the game. I mean, the Chinese have been beginning with renewables, beginning in the late 1980s, early 1990s. They were already inviting Western firms in for wind turbines and solar panels and saying, sure, we'll give you access to the Chinese market. Now you just give us some of your advanced technology or set up an R&D center, or sometimes they might just illegally appropriate the technology. But, one 5-year plan after another, renewables have been part of the Chinese plan. And you're right, exactly. Xi Jinping did not wake up, one day and say, oh, this really matters.
Though China's push into renewables may not have been intended for AI, that's where it could matter most. In the U.S., power demand is exploding, with consumption from data centers alone expected to triple by 2035, putting even more pressure on a grid already under strain. But instead of racing to close the gap with renewable alternatives, the U.S. is pulling back from a sector China increasingly dominates, accounting for roughly 80% of global technology production in solar and battery tech, and more than 70% in wind. This enormous development of renewables in China didn't come free. They had to spend some money to do it. If the United States wanted to get back in this game and compete on the renewable part, does it have the capacity? How much money is involved? How much money has the Chinese government really put into this?
I mean, at this point, it's easily over $1 trillion. It's been billions of dollars every year. And as I mentioned, $1 trillion, just last year in clean energy investments. So there's not a way that we're going to compete across this spectrum of technologies, solar, wind, nuclear. We're just not going to be able to do that at this point, even in EVs, right? China's exports were worth about $76 billion last year. Ours, somewhere around $3 to $4 billion. I mean, don't forget, they're also a country of 1.4 billion people. So roughly 3.5, 4 times as large as we are. So that capacity is much greater as well. But could we get back in the game? I think that was the point of the Biden administration's Inflation Reduction Act, right? It was a mix of subsidies and tax incentives. It attracted an enormous amount of foreign investment. So it had, I think, a lot of potential to reboot the clean energy sector in the United States. But, the Trump administration is not that interested in the clean energy, in the renewable sector. And so, we saw that they rolled back probably 95% of the Inflation Reduction Act.
Can the markets make up a good part of the difference? By that, I mean this. Instead of the government giving subsidies or tax breaks, incentives on renewables, is it possible the market will take over and say it's just cheaper to get energy from some of the renewables?
Well, I think there's always a hurdle, right? When you're introducing a new technology that you have to get over, and that is where the government subsidies or incentives, can play an important role. I mean, we see that now with rare earths, and I think the Trump administration has come around to appreciate, right? That if you're going to compete with China, you're going to have to adopt some elements of their playbook. Right, you're going to have to invest. You're going to have a secure market, for the new investment, for the new technology that you're developing, right? Because you have to get it over the hurdle from the innovation to the manufacturing to the deployment and export. And I think that's the full life cycle of new technologies that China has created, its playbook, and we don't really have a playbook that can compete without a little more government intervention than we've typically been comfortable with.
The U.S. and China may be competing hard on AI, and the U.S. may have taken its eye off the ball on energy that's critical in that competition. But there's at least one area where they may find common ground, agreeing on rules to make sure that all this AI being built and powered is as safe as possible. Do we need to work with China on safety for AI?
Yeah, obviously we do. It's some time. But right now, they're an adversary when it comes to military and security. So I think we're going to be forced to do it when we start seeing accidents and bad things happen. And I just want to make sure we're in the lead when we get to that point. I really do. And I'd take a step further and say when President Trump and Xi meet, it's going to be the first of, I hope, 4 summit meetings. And I'm hoping right now there is, we got a trade deficit, but we've got a trust deficit, big. And I want to close that trust deficit because we need to figure out how we can compete and work together at the same time. And if we don't, the world is going to be a much more dangerous and less prosperous place. So again, I view, and I think a positive is, I really do believe President Trump wants to find a way to work with China, and I hope that the Chinese feel the same way.
Coming up, don't tax you, don't tax me, tax that guy behind the tree. But what if that guy is Ken Griffin? This is a story about balancing the books. Faced with putting together his first budget, New York City's Mayor Mamdani managed to pick a nasty and very public fight with one of the biggest names on Wall Street, Ken Griffin. New York City has long been known as the city of opportunity, home of the Statue of Liberty, Broadway, and Wall Street. It's also home to the highest number of billionaires anywhere in the world. The city's new mayor thinks they might be able to help him with his budget problem.
When I ran for mayor, I said I was going to tax the rich. Well, today, we're taxing the rich.
In April, New York City Mayor Zohran Mamdani stood in front of a penthouse on Billionaires Row, a penthouse owned by Citadel CEO Ken Griffin, and made him the poster child for a proposed so-called pied-à-terre tax on second homes in the city with an assessed value of $5 million or more.
This tax will raise at least $500 million directly for the city.
The move triggered some of the other Wall Street leaders to come to Griffin's defense.
If your goal is to make New York City kind of financially solvent, what you don't want to do is drive out the Ken Griffins of the world. Wall Street and the tax revenues from Wall Street are what enable New York City, all the people in New York City, to have a better life.
Mamdani originally proposed increasing real estate taxes overall, but thought better of the idea after Governor Hochul came up with some help from the state budget. So far, however, he's sticking with trying to tax the most valuable second homes in the city.
I think Mamdani made a mistake, going after Ken Griffin by name as he trumpeted his success in raising taxes, even though he only got a tiny morsel.
Wall Street veteran Whitney Tilson ran for mayor of New York City against Mr. Mamdani last year.
What we're talking about is, those pencil towers overlooking Central Park that are dark at night because nobody actually lives there. I do think tone matters, and just out there painting billionaires as evil is really dumb, given that 1% of New York City taxpayers account for 47% of the personal income tax paid in New York City. A bunch of billionaires went down to Florida during COVID, and that has real budgetary impacts on New York. We should be rolling out a welcome mat for every rich person who wants to live, invest here, and we're already a very high tax city, depending on how you measure it, probably the highest tax burden of any city in the country. But there's something unique about New York. I tell my rich friends who are thinking of moving, the whole point of being rich is you can live where you want to live.
Imposing new taxes on their property may not be the best way to attract wealthy residents. But Steve Fulop, the head of Partnership for New York City and the former mayor of Jersey City, has even deeper concerns.
I think that there is a bigger message with regards to the Ken Griffin conversation, okay? Yeah, it's not great that he was highlighted in that way. And in this environment where you have people being the targets of political violence, CEOs being assassinated, it's inappropriate. And that's been covered fairly extensively.
Whether it was smart to target a specific Wall Street CEO like Ken Griffin or not, the fact remains that New York City has struggled with years of budget shortfalls. Mamdani's new proposal promises to balance the city's budget, at least in the short term, despite inheriting a $12 billion deficit. But only with that pied-à-terre tax included.
It's about the size of the budget. New York, if it were a state, it would be the 13th largest state by population. It would be the 3rd largest state by budget. So he's looking at some real budget cuts. And that, of course, affects the unions that were among his biggest supporters. He wants to spend more money as a democratic socialist, so he's sort of caught between a rock and a hard place.
The challenge facing Mamdani is made more complicated by the structure of the tax system. property taxes are the single biggest source of revenue for New York City, accounting for more than 30% of its budget. But those taxes hit residents in very different ways. As an example, even though single-family homes have the highest nominal tax rate, caps on assessment mean they pay the lowest effective rate, putting most of the burden on apartment buildings, condos, and commercial property owners.
There are weird anomalies in which someone who is grandfathered into an older building but very expensive apartment on Park Avenue is paying a much lower tax rate than a blue-collar person out in one of the outer boroughs, right?
It's a very different burden on those owners, the middle-class family in Queens versus the billionaire on Central Park South. So you have to come up with some type of other structure. I think the pied-à-terre tax is a fair idea.
Ruth Culp-Haber is a partner at commercial real estate firm Wharton Property Advisors. For her, the issue isn't so much the idea of a new real estate tax. It's more a matter of how Mayor Mamdani is going about it.
To take for granted an owner such as Ken Griffin, who has contributed in the form of his company, it's going to be 25,000 jobs before he's done, and hundreds of millions to hospitals and museums. I mean, this is a guy we want here, you know, and we don't want to antagonize him in any way. Citadel alone has paid tens of millions in taxes. Yes, their employees make a lot of money, and I can understand how some people have a problem with that.
Citadel has about 1,300 employees in the city, and Griffin is now saying he'll move at least some of them to Miami and take another look at a huge new office tower on Park Avenue.
Not only has he committed to a 60% ownership of this development, but he's committed to being the anchor tenant, meaning he's going to take like half the space in the building. This is a major commitment. If he pulls out from that, the message that is going to go out literally to the world is New York is not a good place to do business. It would be a disaster.
This wouldn't be the first time Griffin made good on a promise like that. Citadel once employed more than 1,000 employees in its 50,000 square foot office building in Chicago.
We need to look to history and what happened in 2022 with Ken Griffin in Chicago, with Governor Pritzker. And Ken Griffin was building his business in Chicago. There was politics got involved. Ken Griffin wasn't happy about the crime situation in Chicago, and he left.
Thus far, most of what we've heard about to address the budget gap has been about raising more revenue. But Fulop thinks it's not fundamentally a question of how much the city is taking in.
I think at the core of the problem is that you have a spending problem and less of a revenue problem. And that's what we try to kind of hammer home repeatedly.
Where did New York City go in the wrong direction with their budget? There was a time not too long ago that they had balanced budgets. Yeah. They were doing okay. Is it because the spending just grew too much, or did the growth of the overall economy slow down?
I mean, look, it's complicated because you have a lot of things simultaneously happening. So you had costs, COVID, go through the roof. You have tariffs. You have wages and union contracts that have increased fairly significantly. You've had very progressive mayors that have layered on additional social service. So all those things kind of come together, but a pragmatic person would look at it and say, the city budget has grown significantly faster than the rate of inflation, and that is a question mark on why. But putting that aside for a second, what we've tried to say is we should be thoughtful about the program overall and whether it achieves the outcome that you want to achieve.
If the pied-à-terre tax goes forward, and if it's $500 million, that's still way short of where we need to be. Right. I mean, the estimates are over $5 billion. Right. So if you'd won, if you got to be mayor, where would you look for the other $4.5+ billion?
I found it very difficult, and I tried to really get down into the weeds. I mean, you can see $5 million to build a public restroom in a park is 10 times too much. We pay 6 times as much as any city in the world to construct 1 mile of subway. So you can see those examples. Just the school budget's 37% of our $118 billion budget. I have been very involved in charter schools and education reform over the years, and I know there's a lot of fat in there, you know, dead people on the payroll and that kind of thing. So I think I might start with just sort of a 1 or 2% across the board cut, and that sort of gets you, in a $118 billion budget, that gets you a bunch of the way there, and then negotiate from there.
Balancing the books on a New York City budget is never easy. And it's not surprising that there's a range of ideas about how to come up with a few $1 billion to make it work, with or without calling out specific CEOs and their penthouse apartments. But the one thing most everyone agrees on is that we need to get the balance right to ensure that New York City remains a magnet for talented young workers and the companies that employ them.
The best asset here, which is very hard to replicate, okay, is New York City brand is very, very special. And 2, it is the most desirable place for young people to want to be, okay? That is a very, very special thing. Now, you have AI, that uncertainty around jobs, and the affordability on housing. So those are 2 things that go directly at that young person who wants to live here. So that is a challenge. And then you also have places like, use Texas as an example. So JP Morgan today has more jobs in Texas than they do in New York. It's a crazy thing to think about. 10 years ago, that wasn't the case. So the trend is moving in a bad direction. Goldman Sachs trend in the bad direction. Why? It's bigger than taxes. Texas has been very deliberate with their strategy on how they're going to attract jobs. So they changed their court systems entirely to replicate Delaware, to make it more corporate friendly. They're starting a Texas stock exchange to have better access to the capital markets. Then they have incentives, and they have leadership that talks about embracing their big corporate communities.
We need to build a lot more housing, not just low income or affordable housing, but it all trickles through. We need to build more housing for young professionals who can afford to pay more. Look, when Amazon came and wanted to put their headquarters here, you want a mayor who invites Jeff Bezos and the Amazon executives to Gracie Mansion, sits down with all the key people from the city, and rolls out the welcome mat. So some of it's just sort of messaging and signaling and being a champion for business in the city.
Next, Ray Dalio's efforts at ping-pong diplomacy in the depths of the ocean. On top of founding Bridgewater and leading it to the top of the hedge fund world, and then writing extensively about the history of global economics and the patterns he used for investing billions of dollars, Ray Dalio has also spent a good deal of his time and resources exploring the depths of the ocean, including most recently in a joint U.S.-China project, bringing together his interest in China with his passion for oceanography. You've had a long-term interest, fascinating, maybe passion, for the oceans, and particularly deep sea exploration. Tell us about Ocean X, what it is.
Well, Jacques Cousteau, I watched on television, and he took me under the ocean and had a big effect on me. I took my sons diving, we all became divers and so on. And then when I always found the ocean is our biggest thing. It's our biggest natural resources. It's twice the size of all land combined, right? And it's totally unexplored, and it's thrilling, it's exciting, and it's very important. So when I got to the condition that I had enough financial resources, I decided I want to support it. I built an ocean exploration ship, and Ocean X is our initiative to have the exploration and the media show the ocean. As a matter of fact, Disney Plus has a 6-part series on ocean explorers, it's called. It's our ship, and it shows what it does. So yes, I have a passion for that, and I think it's very important. I think that by showing people what it's like, they will fall in love with it. It'll make a healthier environment. And of course, it's extremely important. So yes, I have a passion for that.
So when you send Ocean X out on a mission, can I call it?
Yeah.
What does it do? I mean, what do they learn? What do they take away from it?
There are 2 objectives of every mission. There's a scientific oceanographic research part, and then there's a media part. So we call it that you have to have 2 thumbs up. There's a team that reviews missions. We get proposed missions, and we have a small team of scientists who reside on it. And so the goal is great exploration and great media so that we support people. So it goes all over the world, basically, doing those things.
Goes all over the world, and most recently to China. There was a sort of a joint venture, if I can call it that. Tell us about OceanX China 2026.
Okay. I want good relations, and I thought about ping pong diplomacy, and what Henry Kissinger did, and so on and so forth. I proposed, and China liked the idea, and the U.S. liked the idea of having a joint mission of young explorers that are Chinese and Americans who work together to do ocean exploration. And so the ship went through China, the Chinese waters, and had this group of young Americans and young Chinese early stage ocean explorers do exploration together. And it was great, okay? To see the relationships, to see working on this project together, something like that was, it was great.
There's the experience of the people actually working on OceanX. There's also data, I assume, coming out of this, information.
Oh, huge, yeah.
What happens with that data? Is it shared with the world?
Yes, it's shared with the world. So our terms whenever we go in a country is unless it's extremely sensitive and proprietary, all the data that we have will be shared with the world.
And what do you discover? I mean, the ocean is largely unexplored.
We discover different species. We discover. Imagine that there's a world that's twice the size of all land, so it has an enormous amount. It is in the vegetation, the medicinal purposes. It is in everything that could be discovered on the above world. It's every time we go out, we have species. We have DNA sampling on the ship. We have 2 vehicles that go down 6,000 meters that cover 98% of the world's oceans. And on the vehicles are 3D 360-degree cameras. So we can go down 98% of the ocean and see what's there, and also grab samples of that and bring it up, so that there's a tremendous amount of discovery. We also have 2 vehicles that are manned vehicles that'll go down 1,000 meters. So it's that kind of exploration, and you can imagine all that there is to discover.
You're doing this, as I understand it, for philanthropy.
Yeah.
There's also commercial exploration of some of the deep sea as well. Does this lead to the possibility of mining and things like that?
Yeah, I think the mining question is a very important question. I think the United Nations is doing a very excellent job on dealing with how to strike the right balance of mining. It's like mining above ground, and it's mining under the sea. How can it be done appropriately? What is the regulation of that? And that's has to be taken on by, and it is now taken on really by the United Nations to find the process. But of course, there are minerals, and there could be good mining of it without disrupting. And similarly, there has to be protection of disrupt. So that's an issue that has to be worked out by others, like the United Nations.
Do you anticipate there'll be more with China?
Excuse me?
Do you anticipate there'll be more OceanX ventures with China, this sort of ping-pong diplomacy?
Yes, I expect so. And it's great, but it is with many countries. We've spent this year in Indonesia probably 6 weeks. It's all over the world. I want to say, I think the most important goal of the United States is to be healthy and strong. There are only 3 things that a country needs to do in order to be successful. I've studied history, the rises and declines and so on. 3 things, okay? The first is educate your children well so that they can be productive and also that they're civil with each other. Second, have them come out to a world where there's almost equal opportunity and to be productive in a harmonious environment. And third, stay out of wars, whether it's a domestic civil war of some sort or an international war. If you can do those things and be strong and healthy, you'll be fine. Those three things, that's all it takes. And so when I'm looking at this, I wouldn't be as preoccupied with, that let's think about how to work well together to try to achieve a better world. And that's number one, how people are with each other, right? How we create equal opportunity. I mean, yesterday I was at the Robin Hood. We're sitting here in New York, and I was at Robin Hood, and I've known Paul Jones for, 35 years. That man is a hero to me, okay? Because the idea of there's so much poverty, so much human waste to not have education, that kind of problem, that disparity is a problem. And so I just want to say that emphasizing, dealing with that, great character, how do we operate with each other, is the source of health and strength.
That does it for us here at Wall Street Week. I'm David Weston. See you next week for more stories of capitalism.